Great. We are now live. Chair White.
All right, calling the meeting to order. It's 2:01 p.m. Hawaii time, February 17th, 2026. This is the Tax Review Commission, and this meeting was provided appropriate public notice under the sunshine laws of the state of Hawaii. So I want to do a roll call up front. And if y'all remember last time we did a roll call and we confirmed that we were unaccompanied in the room we're in. So we'll do a combination this time. So if I go first, I'll say I'm here and I'm unaccompanied in this room. So next up, Vice Chair Judith Chalk.
I'm here. I'm in the room alone.
Good. Jessica Enos.
I'm here and I'm unaccompanied in my room.
Awesome. Mark Fukunaga.
I'm here. I'm alone.
Stacy Katakura.
Present and unaccompanied.
Excellent. And Jeffrey Ueoka.
Present, alone in my office. Thanks.
And John Yasuda.
Present and no one, alone in my office.
Excellent. All right, full house and we have quorum. Thanks for being here. And since we have a quorum, we can do business. And the next thing kind of goes with this introductory stuff is to approve the minutes from last time. These are on the webpage and they were part of the materials that went out. I believe we've all had opportunity to review those. If you haven't, let me know and we can put this off. But if you have, we'll move forward. Does anybody have any further changes to the minutes from last meeting? All right, I'm not hearing anything. So I'm going to need a motion to approve the minutes and a second.
So moved.
Got that and a second.
I'll second.
Awesome. All right. We have a motion to approve the minutes. Is there any discussion on that motion? We're by the book here. All right. I'm not hearing any discussion, so let's vote. All in favor of approving the minutes, say aye.
Aye.
Or raise your hand. Aye. Sure. Me too. All right. Motion passes. Thank you. All right. Next item on the agenda is for me. I added this on here. I wanted to address y'all about what happened last time. I'm happy to serve as chair. I'm excited about it, and I've gotten into the role already, but being nominated kind of caught me off guard and kind of scared me, kind of made me kind of nervous. I had some preconceived notions about how that was going to go, and that wasn't it. So maybe I reacted in a strange way, but I'm grateful for the vote, for the nominations, and for Judith coming forward as the vice chair. That's going to help me out a lot. So there's that. And then one last thing. I made a joke last time about chair has a meeting or something like that. So I request we stick to first names if we can, rather than using chair and vice chair and all that. Probably would have been first names anyway, but just want to make that clear. So with that out of the way, next agenda item. This is important. This is communication to the commission and public comment. So we can get public comment and public testimony written, or we can take it live. So Baybars, is there any communication to the commission?
There was no written testimony provided, and we do invite attendance. We have 12 participants right now to write in the Q&A or the chat function to come forward, or if they want to provide comments, we can allow that.
All right. Yes, anybody want to provide a comment live, go for it. I'll filibuster for a minute. You can unmute yourself if you're out there. And you can come in with written testimony, or you can come in at the next meeting live. There's information on all this on the notice and the TRC website, which is hosted on the tax department's website. I think that's been a long enough stall. I don't hear anyone out there. So moving on. Next agenda topic is information on available presentations and materials from the previous tax review commissions. I added this to the agenda because I thought it might help save us some time from hearing some of the same stuff over that the last commission or the last two commissions heard. So my idea was that if we can review some of these and bring any questions back to the staff. That might save time and effort for the staff. And alternatively, we can ask the staff to present some of those same things. So if you're open to that, just to get started, Baybar's made a list of some older stuff. To narrow it down, from my perspective, the most important ones are the GET and income tax. That's the big cash cows, in my opinion. There's one on property tax out there. That's certainly something we can cover. And then there's standard deduction and personal exemptions presentation, but there was a big bill on that a few years ago. It made some big changes to that, but we can still spend some time on that if y'all want to. Again, the point of talking about this is to possibly save time on having presentation after presentation. We can review those and that can get us started on ideas and stuff we want to do. But of course, some of those presentations I remember from last time when I was a staff on the commission were the result of specific questions to the staff. So to Baybar's predecessor. So there's nothing stopping us from making those kind of requests and getting those kinds of presentations. But it's just the ones that are out there, we can check those out instead of rehash them, either watch the video or have a look at the slides. I already have some things I'm going to ask the staff about, so I don't mean for this to be a substitute for that, but something that can save us some time. One thing I want to mention while I'm at it, that's not wasn't on Baybar's list, is a document called the Principles of Sound Tax Policy for Hawaii. It's from the 2015 to 2017 Commission. I like that document. I like that. I think it's evergreen content. I think it's good foundational content for us. So I'm going to bring that up under a different topic in the agenda later, probably. But is there any discussion right now on the topic of reviewing the past materials, past presentations? I've been talking a lot.
I think it's a great idea, Jonathan. As you said, it'll save time. You know, we don't have to reinvent the wheel if, you know, people have looked at it before. Was there anything sent out before this meeting? Because I don't know if I got it, any materials.
I'll have to check. There's a
So this
so
is
there's these slides.
yeah. So this is the this is the
I did see that. Yes.
Yeah. So this is all that was shared prior to the meeting. My presentation slides were unfortunately not ready. But these are like some of the presentations, as Jonathan pointed out, that were given already, and the slides are there. It kind of goes over a bunch of the things that we could cover. The second part of it, the sample research presentations, again, it was just to give you an idea about the type of research Tax Research and Planning Office can provide for you. So I had worked on those and presented some different policy experiments and revenue estimates from different policy experiments that the previous TRC was interested in. Then I kind of shared the consultant reports just to give you an idea. There's an agenda item later today to discuss potentially hiring consultants to give you an idea about the type of stuff that they had done. So there's like two kinds of, so there's this big one where they were given a big ask with certain questions in mind. There are these like 150-page consultant reports that look at the Hawaii tax system. But the thing I wanted to point out is that there were also those that were commissioned to specific individuals to do a specific research, like looking at what happens if we eliminate Hawaii's corporate income tax. And then that one was Dr. Don Ruslang, who was in actually Jonathan's office, under Rule's office at that point. He's retired now. So, but he also wrote the report itself, the final report. And similarly, in the previous time, it was Dr. William Fox, who was a previous TRC chair, and then later in the 2010 TRC, he wrote the report and also did a study. But anyway, I just, Mark, you had asked for materials, so you know, Jonathan thought it would be a good idea to save some time and not waste too much too much of
Right.
your time or my time for that matter.
No, I think this is great, Baybars. Thank you. And yeah, I have no life. So I was reading through the past commission reports going back to, was it 05 or something like that? But it's really interesting. And I think the 22 report actually had an appendix, I think, that listed all the historically all the main subjects that the various commissions had addressed, which I thought was kind of interesting. You know, just
Right.
in one article, short article, kind of did a historical review of the commission's work.
Right. Yeah. So I think that was in some of the other ones as well. So yeah, that was done at the request of the commission. Like they wanted to see what was done already on the questions they were interested in. So that is something we can definitely provide and help.
Yeah. So earlier when I was talking about a list that Baybars made, that's the list that it was in those slides. I first saw it as a PDF document, but it was those slides. And then I added to it that Principles of Sound Tax Policy for Hawaii list. Any other discussion on that? I appreciate that, Mark, saying it was a good idea. And I'm glad you've been reading those old reports. That's excellent. A lot of ideas in there. All right. Well, I'm not hearing anything else. That's not the end of this topic. I'll probably bring a little bit about this back up on a later topic. But also next we have a presentation by Baybars, overview of the Hawaii tax system. And this will give us some idea about this same thing, like whether we want to hear more of these kind of presentations, background presentations live, or review the old ones or whatever. So I might bring this back up after discussion, for discussion after Baybars' presentation. But for now, let's hear from Dr. Carol Cavalli, please.
Yeah, just Baybars.
Excellent.
Thank you.
Cool.
Okay, so I did something wrong. I apologize. Okay, are you able to see my slides? Yeah,
Can.
so, okay, I will be providing a general informational presentation on Hawaii's taxes. There's way more detail in some of the older reports, but this will also provide the most recent data and the most recent development. So in any case, it's something I hope you will find useful. Let's start out with like a general picture of the type of taxes that the state of Hawaii collects. And a majority of these are what we might label as consumption-based taxes, making up about 61% of state's tax revenues. And these are applied on purchases of goods and services by individuals, but also by businesses. The second largest source of revenue is income taxes, mainly the income through wages, but also rents, dividends, and interest. And then the wealth, that takes up about 35% of the state revenues. And the wealth taxes are just the estate tax and conveyance tax, which make a small source of the revenues. Property taxes are not taxed at the state level, but at the county level. That's against the state constitution to tax them at the state level. So that would be typically in the realm of taxes would be going under wealth taxes as well. But we do not have that at the state level. In terms of the collections, the total tax collections of Hawaii from fiscal year 2016 to 2025 are presented in this chart. So I will be referring to fiscal years unless I specifically state calendar years. So I don't want to keep saying fiscal year 26, when I say 2016 or 2015, whichever year, I'm going to be referring to fiscal years. So the total tax collections in 2025 was about 11.5 billion. This was up from 11.1 billion in 24. And as you can see, apart from the adverse impacts of the COVID-19 pandemic in 2020 and 2021, we're back on track of steady increase over time of tax collections. And that does reflect the improving economy and hopefully better tax administration and also the new tax measures as well, which we will talk about. In terms of the sources of tax revenue, the biggest source is general excise tax. That's the lowest bar, about 40% of the total, making 4.6 billion in tax collections. And the next one is about 29% through individual income tax collections. So that brings in 3.3 billion, and everything else is another 31%. I will definitely talk about the major taxes and give more details. But as I said, today's presentation is mainly informational in nature and meant to provide just a general overview, and it's not going to go into too much detail. So the states, this pie chart shows how total collections are distributed. So not all of those taxes that are collected are going to the general fund. Only 87% goes to the state's general fund, about 10 billion. So what general fund is, that's where that's the money that pays for state's main operating expenses. There's also some collection made by the state, about 650 million. This is collected by the state for the counties. This includes things like fuel taxes. There's also a county surcharge on top of the GET, about 0.5%. So this one is also collected by the state, but then transferred over to the counties. So that's about 5.7% or about 650 million. The remaining, there's also special funds. So these are earmarked for special purposes, not for general operating expenses. That's about 829 million or 7.2%. So those go to special funds. That's, money coming in, money going out. Let's start with the largest tax, Hawaii's general excise and use tax. Here you see a very historical picture. And what is general excise tax is a little different. It's something unique to Hawaii. It's imposed on gross income, gross receipts. But the idea is it's for the privilege of conducting business in the state of Hawaii. And gross income is the total business income before you do any deductions for expenses and costs of doing, conducting business. And it includes any costs that you might pass on to the consumers, including the GET as well. And then the use tax part of it is just complementing the general excise tax by imposing tax on the imported properties and services and contracted that come into Hawaii, so that there's no unequal treatment of businesses. So the GET law was adopted back in 1935 to address the fiscal crisis of the territorial government at the time. And it has been modified over the years, but stayed the same since 1978. So the main rates have not changed since 1978. And it's not just a consumption tax, although that seems to be the main idea behind it. So it's imposed on a broad set of transactions than any other sales tax that is across the nation. But the intent seems to be similar in terms of trying to impose a tax on consumption, and it is different in that regard from some of the other states, which generally levied tax on total purchases, purchase price of consumers, but GET is on the gross receipts of businesses. So there are two components, the consumption sales part, but that applies to not just retail sellers, but also contracting, right? And also all types of services and rental income as well. So in that regard, it is kind of unique to Hawaii. And then what we might call a privilege tax is in business transactions taking place between a wholesaler and a retailer, that is also taxed at a lower rate, 0.5%, and also on insurance commissions at 0.15%. Now, so those are the rates, 4% or 0.5%, but there's also about 20% of the gross receipts are actually exempted from general excise tax. And that is a list that kind of keeps growing. So every time a certain activity is exempted, which means there will be less collections. So we do, Tax Research and Planning Office does prepare a report called GET Exemptions Report as required by the legislature. And here are the top 10 exemptions that are claimed by taxpayers, and the top one is nonprofit organizations. So they, you know, the nonprofit hospitals, the schools, any of their gross receipts are exempted from GET. And this takes up about 20% of all the exemptions that are claimed, about 7.7 billion. So in calendar year 23, for instance, about 30,000 taxpayers, comprising 1/8 of the total number of GET filers, have claimed about 35,000 GET exemptions. And that amounted to 38 billion in exemptions, or about 20% of all gross receipts. Now, in terms of so these are, again, giving you a chance to go, if you go back and look at the older tax review commission studies. So the source that I'm citing here, Dr. Fox, was the chair in one of the TRCs, and then he was the consultant in another one of the TRCs. So he has been definitely involved and has done research about Hawaii's general excise tax. I believe that was the reason why he was invited to take part in tax review commissions in the past. So although this is a historical table from 1980s, it still is applicable. So the idea is that as a share of the total personal income in a state, what is the GET tax base as a share of the total personal income? Hawaii's percentage is 129%. No other state comes close to this. The next one is New Mexico with 87% of its income under their tax base. So we have a very broad tax base, and how is it possible for it to be more than 100%? Is mainly because some of the transactions are taxed multiple times. So there's tax pyramiding, and there's also the fact that we rely a lot on tourism. So a majority, a significant chunk of the sales of services and entertainment and amusement and properties that are sold and rentals and everything, a significant chunk of them are also paid by tourists. So the tax base is broader than the personal income of the state. So the advantage of that is that the tax rates have not changed, whereas they have been increased. The sales taxes keep increasing across the different states in the nation, whereas Hawaii's GET rate has remained the same since 1978, as I mentioned. So GET is yet still the largest tax revenue source in Hawaii, and it does generate substantial revenue because of this broad tax base. Now, let's look a little bit about how the collections have looked. So in 25, they were up by 3.3%, following the pattern of an increase in visitor arrivals and visitor spending by around the same rates. And if you look at the latest numbers as of January 26, which is the last report, we had, for the first 7 months of fiscal year 26, the GET collections were up by 6.3%. So this does show that there's a healthy growth in the economy still for the time being. And this is comparing it to the first 7 months of the previous fiscal year. If we look at the individual income taxes, that's the second largest source of revenue for the state, about 29%. The individual income taxes generally follow federal definitions for determining net taxable income. So we start with the federal description of income, but we also have different exemptions. So there are no personal exemptions anymore at the federal level, as you know. A lot of you are tax specialists, and but we have our own standard deductions, our own tax credits, and we have our own tax rates. To put it in context, so we have 12 tax brackets ranging from 1.4% to 11%, which is quite a large number of tax brackets compared to other states. So there's some comparison studies in the earlier TRC consultant reports. But these brackets have been expanded in 2025. As Jonathan was mentioning, we had this major tax cut bill, a multi-year bill. It's called Act 46 of 2024. So it has been rolling out, and in tax year 2025, all the brackets have been expanded. What that means is effectively the effective tax rate has gone down for every taxpayer. Now, I will mention in terms of some distributional effects later, but what is happening is a majority of the taxpayers. So I just did a little like a distributional chart. So this is the kind of stuff that we can do. So since we have direct access to confidential data and we constantly do research and provide statistical reports, this is just looking at all the tax returns of N11 resident tax returns and N15 non-resident tax returns, a total of 741,000 here. And as we see, the largest number of taxpayers are in the lowest tax bracket, about 38%. So tax bracket 1 under 1.4%. And the next highest level of number of taxpayers are in the middle, right? Tax bracket 7. Now, if you look at the distribution of the tax liability of these different tax brackets, though, if you look at the lowest tax bracket, the liability is negative, which means they receive more refunds than they receive actually tax credits that are refundable that exceed the total tax liability of the taxpayers which are in this bracket. This is kind of showing the progressive nature. And if you look at conversely on the tax bracket 12, although they represent about 1.7% of the taxpayers that fall in the 11% bracket, they pay about 41% of the taxes in Hawaii. So we have this a progressive nature of individual income taxes. So we have an individual income tax statistics report also by our office. So for further details, please do take a look at that if that is some area of interest for you. To cap it, if you look at the effective tax rates, which is the total tax liability divided by taxable income of different income groups. So we divided them into Hawaii adjusted gross income groups. So the ones below 10,000, before tax credits, their tax liability to their taxable income was about 2%, 2.3%. After the tax credits are taken into account, which are refundable and non-refundable, their tax liability as a share of their taxable income goes down to negative 6.2%, which means they receive refundable tax credits or basically subsidies that are targeted to the low income groups. The same thing happens for the second 10 to 20,000 income group, and then so the bigger the lower the income level, the bigger the targeted effects of the tax credits that can be seen. So our office also prepares a report on tax credits. We monitor and take a look at all the tax credits, again, required by the legislature, that is published every year. So what has been happening lately? I mentioned already the tax cut bill. So what has happened as of this year, calendar 26? So what we have seen is, if you look at here, just 3 years ago, our standard deduction rates had not changed for more than a decade. So now we have increased the standard deduction rates by almost 4 times. So the currently under Act 46, the individual income tax cut bill, every year there's a certain change. So currently, as of this year, January of this year, this has been reflected in withholding taxes. So people see the immediate effect in their paychecks. And then the tax brackets have been expanded, as I put that detailed table earlier. last year. So when people file their taxes, they will see the effect a bit more through larger refunds that they will be receiving. Also, last year, the withholding tables were changed, and so they were also withholding less taxes from their wages if they're W-2 earners. Now, so this is, I just, since it's like so many different filing status and 12 tax brackets, so not to throw so many numbers at you, just to give you an idea, I highlighted two sections. So looking at joint tax returns, right? So back in 19 to 24, a family, a low-income family in the 19,000 to 28,000 range would be paying 6.4% marginal tax rate. And as of 25, they're paying 3.2% marginal tax rate. But again, this applies, so they're also paying less on the first 19,000 of their taxes. So there's an informational website, taxcuthawaii.org, where people can actually put in their income and see the impact of how much tax relief that they might be expecting to get. Some of the statistics that we provided, though, is like in this lower right-hand side. So what I did here is that looking at the Hawaii's joint tax filers, married filing jointly, I broke it into 10 deciles. So these are like 10% of taxpayers in each bracket. So as you can see, the lower the income, the higher the tax relief as a share of their initial tax liability. So even the nature of the tax cuts were such that it would proportionally provide tax relief the lower the income level. Of course, everybody did get a tax cut. So it's just that as a share, it's a lower amount if you're in a higher income group. Now, talking about what is the impact of that in tax collections? So in 2025, starting in January, we see this negative effect, right? We changed the withholding tables. So that means immediately, although people don't have to file their taxes until April of this year, they saw the immediate impact through lower withholdings in their paychecks starting in January. And you immediately see the effect that there's negative tax collections. And we ended the year kind of flat, fiscal year 25. And what happened in 26 so far is that we're down 9.9% for the first 7 months of the fiscal year. And this is in line with okay. So I forgot to mention that our office, one of the biggest jobs that we do, like we're extremely busy right now with, is provide revenue estimates for every bill that goes through the legislature that has any tax implications. So our office, Tax Research and Planning, had provided these estimates that this Act 46 is expected to affect. So as you can see here, our estimate was about 600 million reduction compared to the counterfactual of not passing this act. And then, so this is immediately reflected in the reduction in individual income taxes. And as we can see in fiscal year 26, it's already down by 10%. So this is within the bounds that we had already estimated and predicted. Moving on to the third largest source of tax revenue is transient accommodations tax. So transient accommodations tax is about 7% of total tax collections. And if we look at this chart, it is basically, it used to be called the hotel tax, but the definition has expanded. Any short-term rental, basically anything less than 180 consecutive days, would be subject to a transient accommodations tax in addition to the general excise tax. Just to give some perspective, back in 2017, Oh, okay. I should mention, so yes, I have something to say about this complicated looking bar chart. What is happening is that as you can see, there's a huge drop in fiscal year 2021. This is the effect of the COVID-19 pandemic, right? The tourism numbers have taken a nosedive that immediately shows up in the TAT collections. And one thing that happened at that time was Governor Ige had the 6th emergency proclamation. It suspended the TAT distribution to the counties. So what was happening until then was the counties were getting about 100 million of the TATs transferred over to the counties. So it stopped in May of 2020 to May of 2021, and they've been authorized to impose their own TAT, which they did at the rate of 3%. So going forward, we don't see any allocation to counties. So all of that comes and becomes part of the general fund. So this middle part, that was about $300 million into general fund. Now it goes to $600 or $700 million. So so we see that increase in general fund. And for that reason, TAT was relatively minor as a source of revenue, about 4%. It went up to 7%. So a sizable increase as a source of revenue. The other thing that happened is the rates have increased for 2018 through 2030 temporarily by 1%. So the rate went up from 9.25% to 10.25%. So this is supposed to be temporary and expire at the end of 2030. And part of that is, as you can see, there's something here called Mass Transit Fund. So that does part of that additional revenue beyond the regular TAT is transferred over to basically the Mass Transit Fund to fund the rail. The other thing is we passed the latest TAT related bill was Act 96 in 25. So this has permanently increased the TAT by 0.75%. So what that means is effectively the TAT now is 11% as of January. And this is by 2031, once that 1% temporary increase goes away, it means it's going to go back down to 10%. But that increase has been earmarked, has been called the climate impact fee or the green fee. So the governor has a program where certain proposals will be provided, and it's going to be used for environmental purposes. The other thing that is new is a TAT for the first time imposed on cruise fares. Currently, this is not being enforced because it's being appealed, but that is part of the bill. So potentially there could be a TAT on cruises as well. Having said that, so what do the collections look like? They were slightly negative actually in 2025, and this is partially due to the fact that there were the Maui wildfires. So if you look at the distribution of the tax liability from different counties, the Maui County contribution was reduced by 22% in the last 2 fiscal years. Or if you look at the Maui County's share in total TAT liability, it went down by about 7 percentage points, and that does have a lingering effect in the overall tourism numbers and the TAT collections. However, for at least 26, we see a bit of a growth, about 3.2% positive growth. So we have now covered the 3 largest sources of tax revenues. And let's talk about the general fund, right? The one that does that pays for the state's main operating costs. Now, the general fund was up by 4.2% in 2025. However, this increase was partially due to a one-off boost to the estate tax collections back in September 2024, which I highlighted in yellow here. So if we were to kind of ignore that estate tax collection had not occurred, we would have ended the fiscal year by positive 0.5% or something like that, relatively flat. Now, what is happening in fiscal 26 is that the first 7 months we're down by 5.5%. So this is partially due to that increased base of that one-time of boost to estate tax collections that is not going to happen this year. So typically, estate tax collections are about 50 million every year. That 1 year in fiscal 25, it went up to 400 million. So then it's going to go back down to 50 million. So that will not happen, which means even if nothing else changes, the general fund collections would go down this year. So if we remove that effect, we would be looking at about negative 0.2%. And this is mainly due to the individual income tax cut bill, the Act 46. We have the Council on Revenues, another volunteer group of experts who have to meet and forecast the general fund projections for the next 7 years into the future. They meet 4 times a year and make these forecasts. Last time they met was in January, last month. And their current forecast for fiscal 26 stands at negative 4.7%. So if we continue the same trends as I showed you in the general fund, we are expected to end up somewhere between negative 4 and negative 5%. So this is where we stand. And then they do take into account all the different tax legislation we provide the revenue estimates for. They take that into account for their forecast. Their forecast is around 2% for the next 4 fiscal years after that, and about 3% for the last 2 fiscal years in their work horizon. This is kind of what we're working with. Of course, anything can change. If you have an economic recession, you might see something out of the ordinary. This is taking into account the current forecast given the current economic conditions. Now, I have provided a general overview of Hawaii's tax system, but I want to end with a side note. I had mentioned earlier that the Hawaii counties are the only one who can tax properties, property taxes, and it's against the state constitution to impose property taxes. But I also want to point out the fact that Hawaii is also the only state in the nation where all public schools are run under one statewide system. As you know, it's funded and managed by the state. In most places across the US, local governments, like counties would be local governments, are the ones that spend their biggest chunk of their revenue, right, on education. In Hawaii, it's less than 1%. So counties don't spend much, and property taxes being part of their important source of revenue, the immediate result is that the property tax rates are relatively lower in our counties as compared to the average in the nation. We also have obviously high house prices, but this is something to keep in mind that there was some interest, I think, that was provided. Property taxes, again, is not something that the state is able to tax, but it is something that does come up. So I wanted to end on that note. But this is all I have for now, and I'm happy to provide any more details, anything else you might need. So I gave you a little flavor of all the taxes we monitor, and I mentioned different reports that we write, and some of the research that we do. We provide revenue estimates. So I'm happy to do the same in future meetings. Thank you.
All right, thanks, Baybars. Any discussion or questions on that? All right, I got a couple. Mark, are you saying something? You're muted.
Yeah, I was just gonna ask Baybars, is there was that one chart on other states comparing sales tax, I think, sales and GET.
Right.
Is there more context from other states? Just, I mean, what I've always find helpful is that if there's a bigger context to say how does Hawaii do? You know, for example, you know, how regressive is our system? You know, given our reliance on GET, do we, you know, because I know other states, and maybe most other states usually have a food and drug exemption for GET sales tax. So just kind of curious if we can get and that's just an example, but is there data on how we are positioned relative to other states in the TRC things, or not there elsewhere?
Right. So they have been definitely addressed by all the past TRCs. So GET has been one of those because it's the major tax source, right? So we kind of have to address it. We have to talk about it. And there is a whole section in the 2015, 2017 consultant report that's purely on regressivity of the taxes, and especially GET and the consumption taxes and how regressive it is, and or versus not. The presentation that I shared by Seth Colby also has some research about that, and he has some different ideas that show, well, although it's regressive in nature, but we kind of complement it in certain ways that like there's the food and excise tax credit that is supposed to address the fact that lower income families are paying these general excise taxes, but by providing a refundable tax credit, part of that burden is alleviated and things of that sort. So and I can make presentations. I've written the tax credits and GET exemptions reports myself, include also individual income tax report. So we can definitely dive deeper and provide more data. There, they do compare it to other states. So that's the kind of thing I think the consultant reports can be useful. We have only so much time. Like my main focus typically is like monitoring our own taxes. And unless I'm asked to do, like, I won't be looking too much into what's going on elsewhere. Just I might just look at average US state, but I won't necessarily do a comparison normally.
Got it. You know, I have seen stuff out of the Tax Foundation, not the Hawaii one.
Right.
Do you find that their materials helpful? Because they do these 50 state, you know, comparison occasionally, comparisons, whether it's income taxes or, you know, gas taxes, what have you. Just curious if you find them constructive.
Yeah, I mean, we do look into all the different views, so that is definitely one of the places we look and consider for sure.
On that, on something Baybar said, specifically to the regressivity question, Mark, and I know that you're just using that as one example, but I would add the refundable earned income tax credit to that too, because that became refundable. So that's I'm kind of with the former TRP officer, and that the whole tax system with the individual income tax, it's extremely progressive.
Yes.
Helps us out with the regressivity of the GET.
Yeah, I'm guessing earned income credit really helped but that was fairly recent, right? I mean,
that was very recent.
Yeah.
Well, the refundability portion was even more recent. Originally, it wasn't refundable. And then the changes to the Baybars went through from the 2024 Act twist that graph a little bit more, so more of those people after credits will be in the negative.
Yeah.
And those are some people that are paying a larger percentage of their income in GET.
Got it.
And then just through my job with the Multi-State Tax Commission, we're looking at all the states all the time, including Hawaii. So we do use the Tax Foundation's data a lot. Their data is their data. Their narrative is another thing. So some of our members may or may not like their narrative, but their data is their data. And the another resource on that kind of thing is something called the Council on State Taxation. It's COST, C-O-S-T. They're sort of they're similar to the Multi-State Tax Commission that I work for, except our members are the state departments of revenue. Their members are corporations, so they're coming at from the other thing. They produce a lot of data and a lot of multicolored maps that'll show you like where the states stand on a bunch of different issues. Hawaii does have the broadest GET, so or the broadest consumption type tax. So that's something, it's a priority of mine. Is we can get into that later, but the general excise tax. Any other questions for Baybars?
I have a question for about the income tax. I think Dr. Baybar showed example for a few years ago, the comparison for the tax rate, tax bracket compared with the few years ago. For example, like a 28,000 income, they would pay like 4 or 5%, but now it's only 3%. I'm just thinking, was the like some other factors were taking into consideration, such like inflation adjustment or anything. So what are you really comparing with? Especially for Hawaii, I think we have some uniqueness compared to mainland economy. So was how was the inflation adjustment really taking to in fact when you do the study and the research?
Yeah, so we did take into account the growth rate in total personal income. So that does include inflation, and in general, income tends to outgrow inflation a little bit. And so we do factor that in for sure. So that's why every year, even if nothing would change, we would see a different revenue impact. So it will be more and more negative every year, slightly more negative. But otherwise, these are all simulations. So it's the same way. It's assuming that everybody's income would grow at that same rate on the average, at the rate of total personal income. That is coming out of a forecast. So for the next 5 years, we use the Council on Revenue members forecast. And then if it's anything beyond that, we will use the historical average growth rate and total personal income. So yeah, that's so I mean, if we do any policy experiments, like even if you were to hire consultants, they would still have to rely on the research that we provide, because we have direct access to tax return data that we can run these simulations with confidential data. So that's one of the, I guess, strengths that, and then we do work with outside researchers. We work with a couple of economists from Stanford, University of Chicago, and mostly with UHERO, UH Manoa. So we do publish these part of the studies on our website. So yeah, so we do use it all the time. So we try to make sure that we're staying up to date with what we do. So we do definitely take inflation, any income growth into account for those.
Thank you.
Anything else? All right, I got something. So if you come up with anything else, let me know. But I got a question for Baybars. Just for fun, the TAT graphs were kind of shocking to me. It was going along, and then it went down with the coronavirus pandemic.
Mm-hmm.
And then when it went back up, seemed to me like significantly higher than it was in 2019, 2018, 2019, the last full years. Do you have any idea what, and the rate didn't spike, the rate spiked in 2018, or went up in 2018. So do you have any, I'm guessing that's because numbers went up and because prices of hotels went up, and the TAT is a share of the price of the hotel. Do you have any idea of the share between those two factors?
Yeah, so that's something I was curious too. One of the things that I can imagine and hope is better tax administration. So better compliance is part of it. We have some programs and some taxpayer education. Not everybody realizes when they rent their place that they need to collect it. You know, with the rise of Airbnbs and all of that, now you know, new legislation is being considered of maybe collecting the taxes directly from these rental companies and things like that. So I think part of it is hopefully better tax administration as well.
Okay.
Yeah, because that graph, as you pointed out, is not only about which fund the money goes to, but it's the total collections that actually go up.
Mhm.
In addition to, you know, the prices have gone up also significantly. So that is completely, you know, the higher the prices, obviously, the higher the collections will be. So it is that.
Yeah, I
Is
hadn't thought about the effect of Airbnb and I think there was like a composite collection bill or something like that a few years ago
Right,
too.
right. But I can look into it more. But yes, I that's my educated
All right, cool,
guess.
thanks.
But yeah.
Stacy, did you have something?
Yeah, I was just wondering if there is a way that we would be able to see whether that spike in the TAT has had any impact on the tourism.
You mean the rates going up?
Yeah, yeah.
Yeah. The numbers have not changed, but the one thing that is true is that there were no county TAT before then. So if you combine those and then add the GET, you know, that's I know there's testimony by industry representatives that this might be the last time we see a raise in a while, if there's ever one.
Yeah, so if I'm right, the county TAT surcharge was 3%.
Yes.
So it went up 3 percentage points versus
So it's on top of the
10.25.
11% of TAT that is
so 11 to
at the
14,
state level.
significant rate increase.
Yeah.
So sometimes when I was at the department, I remember this term getting thrown around of like total spending per tourist or something like that.
Mm.
And so the TAT could go up and total spending per tourist could remain flat, and they're just spending less money on other things. And so therefore you're spinning your wheels because they're spending less money on GET taxable things. But the cynical part is that, well, they're spending their money on 14% taxable things.
Right.
So that might be a way to, if that's a possibility of measuring what Stacy was asking about.
Right. It is certainly possible. I'm sure there can be, again, that could be something that you commission, maybe a research into it. It's just a matter of piecing out the data and see if there's been enough, I think, many years of observations where the rates that go up that it might be possible to do some research. People who do research on tourism, economics, I'm sure. We have some professors from UH that did work on issues and have, I think, contributed to past tax review commissions. So yeah, so it should be part of the discussion, I think.
Yeah, so could be a prompt for a consultant.
Yes.
Keep that in mind. That might come up later today. I think that was all I had. Anything else for Baybars on that presentation? Or I continue with my script. Okay, so that got us talking a little bit. And so seeing that and then knowing that we can review the old presentations on YouTube or the slides or whatever, we can make a decision next meeting or something if we want to continue that, or if we want more presentations, what our appetite for more presentations are. And we can do that we can do that one meeting at a time and one presentation at a time. What I'd like to say is maybe just that the GET one, which is linked in the materials. If we can all have a look at that one at least before the next one, because that's probably the simplest text type. So it's probably the one we can look at on our own and understand the best. This is a tax practitioner heavy tax review commission compared to the last one. So I'm pretty sure we already understand the tax types. All right. If no more discussion on that or Baybar's presentation, I want to move on to something again related. All right. So the next one on the agenda is discussion of potential themes for the commission. So I've got some comments here, but the first one is just to ask y'all, does anybody have anything to share now, or anybody have a topic or project or a favorite tax type or something like that? I've got a few things. Go ahead, please.
I was actually interested in credits. I mean, have there been studies on like tax credits? There, you know, I think we've looked at certain exemptions for GT, you know, but I guess, yeah, how has the tax credits been doing? And I guess in relation to what they were intended to accomplish, you know, to stir whatever, you know, and how much has it costed versus how much revenue has the incentive brought in? And I guess along that lines, on the administration of credits, how much audit efforts, how much abuse has been found, how much, yeah. Has there been anything like that?
Cool.
So,
That is
quick
an
answer.
evergreen topic, Jessica. I think every tax review commission is interested in that. Baybars, please.
No. I was going to say that is definitely being looked at, but we do publish an annual tax credits report, but that is more statistical in nature. The kind of thing you're talking about, whether is it working and is there any abuse or does it serve its purpose? What the legislature has done is that they have tasked the state auditor's office to evaluate different tax credits and different exemptions every year. So they have been writing these annual reports, and they can kind of come and work with us. Like, we provide them the data, but as a tax department, we don't provide opinions. That's why we have to rely on the tax review commission to give those opinions. We provide the data, the statistics. Hopefully the numbers speak for themselves, but definitely that's why a consultant can give an opinion, the commission can give an opinion, the state auditor's office can give an opinion. We do not opine on merits of the tax policy themselves. Whether it serves its purpose, we can definitely try to quantify that. But yeah, I mean, I can certainly at least put together something from the reports to get the discussion going, but it would definitely be a good thing for a consultant to look at for sure.
So if I remember the bill correctly, Baybars, or it might have been two bills, to have the legislative auditor look at these things, there was like a schedule of certain exemptions, certain years, certain credits, certain years. Is that
correct?
What you wrote? Okay.
Yes.
So I guess we could have a look at a couple of those audit reports in the same way that we are considering looking at the old material. So I don't know off the top of my head what they've looked at yet, but Jessica and anybody else that's interested, if you have anything off the top of your head, like you just want to say like this exemption, this credit, or these three exemptions, or these three credits, then Baybars might could find, if they've done a report on that particular one, he could point us at that one so we don't have to look at them all or go fishing through them. So if you have any particular credits in mind, sorry, Mark, please.
No, I was going to chime in and on Jessica's comment. I think it might be a good exercise for us to look at credits less in terms of individual ones, whether they worked or it didn't, because, you know, that's a boil the ocean exercise. But I do wonder whether the ledge would benefit from a framework to evaluate tax credits. Because my impression is, you know, you all have been to the Capitol. I mean, you know, these things are kind of proposed, you know, they're all one-offs and they all seem like great ideas, but then they end up staying in the code forever. And I just wondered whether there is a better way to guide the ledge in terms of how to evaluate them, maybe require that they have a 5-year sunset so they get reevaluated, you know, or but I think maybe that would be a helpful thing if we can kind of come up with a policy framework around it, as opposed to maybe looking at individual credit, you know, whether they work or don't work.
Discussion. Anybody else? Anybody got any thoughts on that?
Yeah, I mean, I think,
something
you know, overall is good. But maybe there were some, I guess if the three maybe like low income housing credits, film credits, PV credits, there seems to have been a lot of complications around there. And, you know, I guess, you know, a bunch of us can see the taxpayer side challenges to it and see certain things, you know, just not happen in the state because of how complex it is. And so just, I guess, trying to quantify, like, does it work? Does it not work? I mean, and if it doesn't work, should we just take it out instead of torturing taxpayers or what, you know, or just trying to figure out, like, what is the benefit? What is the cost? And
I think
Right. Please, Mark, please.
I think last year in the last session when Kyle Yamashita was chair of House Finance, didn't he try to require everyone to re-justify all the credits? It was kind of a blunt approach, but there was something like that was going on in House Finance, I think.
There's been sunset requirements too, where there was talk of all of them having 5-year sunsets or something like that. But I don't remember that from last year. I wasn't involved last year.
Right. So there has been a bill that proposed that, and yeah, and I think there's one again this year, requiring all of the new tax credits to have a sunset, and then the existing ones also to kind of to be renewed or to be reevaluated every 5 years.
So I sense a way forward with Jessica's evergreen idea and Mark's idea I have not heard before. In that Jessica threw out 3 credits. There could be more, there could be a few exemptions out of that. And we can have a look and see which of those the auditors, the legislative auditors had to look at. And as we're looking at that and seeing, determining for ourselves or thinking about whether it worked or not, that might help us toward a framework that Mark's talking about. It could also lead us toward a prompt for a consultant to develop a framework that we are seeking, and then we can address that framework that the consultant comes up with. Because I don't know if I'm able to come up with that kind of framework or us together, but that's something we can discuss. So at the very least, Baybars, can you have a look, or you or your staff have a look at the legislative audit reports and see if they've covered those 3 credits that Jessica mentioned?
Mm-hmm. Yes.
All right.
Jessica, you mean that like the GET exemption for like the 201H affordable housing projects, right? Okay. Yeah, but
yeah.
Oh, so not the income tax LIHTC, but the GET.
Both, actually. I mean, just the
both,
overall
okay.
package, because there's like the GET components, there's the income tax components.
and
But I know the GET has
all-
been challenging. The GET, you know, that you gotta pay till you get well, now they just came out with that announcement, right? That they just came out recently. I forgot what it said, but waiting for the exemption letters and stuff.
Is the GET one? The GET one's kind of new. I'm not familiar.
Yeah, it's like, I don't know how new it is, but it's like buried in, gosh, I want to say like 104 and 201H somewhere in there. And I know like you gotta send a letter in when you're doing an affordable housing project. I'm a land use attorney, so I don't really get involved on the tax side. I quickly punt them to their tax professional, but I'm familiar enough with it to know it exists.
Okay. I
All
just
right.
asked because the
I
newer
just don't
it
know
is, the
where.
less likely. Okay, cool. The newer it is, the less likely the auditor will have looked at it. But LIHTC income tax credit, they might have looked.
Yeah, and the LIHTC, is it? I know it usually goes hand in hand with a GET exemption, but it's like the feds hand it down to the state, right? And then everyone applies to it for the pool from HHFDC. But
something like that.
that's another area where it's very, very complicated, but I know it exists.
Same.
So the GET was for like the affordable rents for the affordable housing projects, and you have to get this pre-certification. I know there are people that you have to like pay the GET until you can get the certification, so you're incurring this additional cost and going back and amending, but now I think this tax announcement 2026-02 came out with some new things related to that.
Yes.
This pre-certification process.
Right. Yeah,
So
I
I
can
think
definitely
they
do the
were addressing it.
research. I can do the research and bring that up. Like, yeah, you're right. There's tax announcement. There's some bills that are in discussion. There's so where do we stand? I can definitely help
Right.
put that together.
I think it's Form G37, and then it's implementing 201H-36.
Yes.
Oh yeah. 201H-36, exemption from general excise taxes.
Yeah.
It was
237-29 and 201H-36. Yeah.
Okay.
Yeah.
And 201H-36 has been around, so I think
Yeah.
there's a chance that legislative auditor covered that one. Okay. All right.
Repeal and reenactment on June 30th, 2030, the notes say. Not sure.
All right. Judith's got her hand up. Judith, please.
Oh, sorry. I did it by accident. Sorry.
All
I
right.
don't know how to get rid of it. Oh, here. Sorry.
All right. Well, good segue to anybody else got any thing to share, topic, favorite tax type, pet project?
I think I mentioned the regressivity issue. I mean,
Okay.
but I need to do the homework of looking at the past reports. I guess the other area, the general topic would be on what I'd call tax competitiveness as a state, vis-a-vis the other states, how supportive is our tax system to investment into Hawaii? That's obviously a huge topic, but that general area I think is of interest because I do think the economy is at best going sideways, if not going declining, based on UHERO metrics. So I do think that's an area to look at, and whether whether we're excessive, whether there's more opportunity for tax revenues, and how in particular. So broad subject. But things like and this may be in the county level, tax increment financing, interesting subject. That may be I don't know if you consider that a property tax issue that's reserved for the counties, but yeah, that's just one example and certainly not an issue that I care about that much, but just citing it as one area. And as we all saw under the general subject of tax competitiveness, what's going on in California with the wealth tax, and Newsom's taking a position there. Yeah, there have been some ideas for wealth taxes in Hawaii. I think that's an interesting area as well.
Thank you. Any comments on those? I like what I'm hearing. I'm glad we've got ideas here. was hoping that I have silence during this portion of the agenda.
And
I
I'll throw out
appreciate it.
one other thing, which I think is a huge economic challenge to the state, is climate change resilience. You know, that, and there's, you know, I think right now there's kind of a one-off approach to a lot of that stuff, primarily in the tax credit area around solar and what have you. But I do think that is a looming issue for the entire state, you know, and that's probably, I've been involved with something, you know, UHERO's trying to create an estimate of how much resilience will cost us. The only literature out there suggests it's like 15, 20 billion. I think that's way low. It's really probably, unfortunate, was the number of digits for hundreds of billions, 12-digit kind of problem, which by definition then becomes partly a federal problem. But we as a state, I think, need to think about how you use the tax system to help address that whole issue, both in terms of how we construct, you know, in the state, and how we become more resilient in financing all of that. So my concerns tend to be more on the broader policy level.
I like that. I don't remember the details anymore, but the last tax review commission that I was helping to staff, they commissioned a study on carbon tax, and I think that was toward funding climate change resilience or some responses to climate change and stuff like that. So that is another topic. I'll put an evergreen topic for now, that is very important. So I like what I'm hearing. Thanks, Mark. Thanks, Jessica.
Another one I guess I would
Please.
be interested in understanding a little bit better, and I'm not gonna, I don't know if I'm gonna say this correctly, but how tax policy can shape the affordability of housing in Hawaii. Just with that being such a big issue affecting the state of the economy and the population growth and whatnot, what kind of policy changes can we suggest to try to mitigate those issues?
It's kind of funny you mentioned that, Stacy, because yeah, all my clients chase LIHTC and any kind of subsidies they can get. It's a county issue right now. I know it's county real property tax, but one of my clients has entitled land. They're gonna get dinged hard this next year for having developable land that hasn't, you know, just sitting empty, but it moves up in that tax class, and then now they're gonna owe money on it next come August and February 2026, 2027, and all those costs just get passed on.
All right. Yeah, I was thinking that intersected with the LIHTC and the 201H36.
I do know, like what Mark brought up the TIF, but I think there's a county type of tax, but there's also I think it can be addressed on the state side as well. So it would be interesting to see if there's anything that the state can implement.
CFDs are another one, right? But that's more of a process and a tax that just gets put onto the districts, similar to tax TIFs. But interesting though, from the state level, yeah, because I don't know about anywhere else, but doing stuff with the county of Maui is challenging at best.
All right. We're gonna have to start triaging here. Careful. Because I haven't even got to mine, you know. So anybody else got anything? All right. So there's still plenty of time to bring things up. Don't let me cut you off. You can bring this up in a minute or at the next meeting, whatever. But we do have those two resolutions, one from the Senate, one from the House. The House one's a little more generic. The Senate one is very specific about the long-term housing, sorry, long-term care financing. So long-term healthcare financing. So we might, we don't have to look at those things. I did a little bit of research. There is a bill. There's two bills, one in the House, one in the Senate. They're identical bills. One got a hearing already, the House one. And it's basically to make a legislative commission to kind of study this topic. So if sort of late April, if they've done that, then that doesn't officially absolve us from looking into that topic of that resolution, but it kind of seems like it would put it on some other group that's specifically assigned that. But in the meantime, we can start looking at it. If anybody has a interest in that, since that's sort of a ready-made topic with a resolution to go with it, you can see if anybody's interested in that, you can run with that if you want to. You can speak up now, or let us know at the next meeting, or just send Baybars an email and get started. All right.
Do you have what's being proposed, or did you say there was somebody that already has a bill going?
Yeah, there were two bills. There's one it's one of those companion bill things. It wasn't part of a package. That's the first thing I looked at. So it wasn't part of the governor's package or any of the specific caucus package. But it's basically to form a legislative commission. There's an appropriation for it, some temporary staff to have this thing going for a couple years in order to.
Okay, so it's just to get staffed right now.
Yeah, and then they would be the bill would assign that group, and I can't remember I didn't read the bill specifically to see like who would be on it or whatever, but there'd be some people appointed to be a part of that, and their sole remit would be to answer that question of how to address the issue of long-term care financing, or financing long-term care. So if they do that, it got through the health committee, but it goes to another committee. It's got an appropriation, so it'll go to the money committees eventually too. But if that gets through, then we're kind of off the hook. But so we probably don't want to put too many resources into that. But it wouldn't hurt to get started if anybody's interested in that question. Baybars shared the report from December 2024. That thing, it was mostly about staffing for long-term care, not the financing of it. The only thing it mentioned with financing was sort of transitioning from like paying for nursing home type facilities to pivoting toward less expensive options, which I can't remember the alphabet soup acronyms, but basically in-home care and at-home care, those kinds of things where people age in their homes instead of at nursing facilities. But that was as far as it went. And I think that's one reason why that bill might be there, to get more on the financing side, because they got a lot on the how to develop the workforce. So I've said enough about that. If anybody's interested in that and wants to take a run at that, just let us know, let Baybars know in between or anything, and you can get started. If not, we'll just, consider it as a group next time and go from there.
Oh,
yes,
sorry.
please.
Just out of curiosity, like, I guess I don't even understand, like, what does that mean? A long-term care financing, like the state would fund long-term care financing beyond like whatever grants or tax benefits it gives to like public, I guess, like, I don't know what they have on Oahu, but like Maui has, like, we have one like elder care, like major facility, Halemakua. So I guess I just don't understand how it would even work for a long-term care financing program from the state. So
yeah, you're at the end of my my expertise at this point.
Yeah, what little I know, which is little, is that facilities, you'll never have enough elder care facilities to serve everybody. So the only way you can realistically do this is to support in-home care.
Oh,
And
got it.
yeah, just so you have because you have the beds there, you know, and you don't
Yeah.
have to construct big nursing homes, and they're not so great anyway. So I think that where the tax where this may affect, you know, the tax side is if people start setting up in-home care for their grandmothers or what have you, or even, you know, distant relatives, or just for fees, as we do already have a lot of those. Do you create tax incentives to do that? That would be my guess. You know, renovation of a room for elder care in your home, you know, and then how do you support remote workers, nurses who are then going to call there? Do you create a transportation infrastructure with subsidized rates? I don't know, all of that, Jeffrey, I would guess.
Well, that's smart. That makes sense. And
There
like-
is a you know, building on that, I ran across, I know the state of Washington has some type of long-term care program where they assess like payroll tax, you know, like a 0.5% surcharge on payroll, and you get some money at the end of the day to fund that. So for in-home care, like Mark was talking about. So that's the only one I ran across.
oh,
But
I
I
wonder if
think,
there's
yeah, I think it's a national problem, and it's not going to be done with nursing homes. So
oh, I wonder if there's even enough like, or if there's a tax incentive for people to go into that field also, because I don't think there's an abundance of, what are they, CNAs or something? I forget what it was, like,
yeah,
yeah,
For
we did that for
overall
my
home
grandparents.
healthcare agencies, it's really hard to find home health care. Like they're all super busy and it's hard to, you know, catch them or whatever. But yeah, I mean, are we trying to reduce like I don't know, I guess people tend to try to get to Medicaid. Like, are we trying to reduce their costs that Medicaid dishes out or something? Or is it like a resource issue that we need more like programs or cost, or I guess maybe the whole thing?
These are all the questions they want to know the answers to, I think. And Jeff's getting dangerously close to being nominated for this one because he nominated me to be the chair.
And I think that was a brilliant decision, by the way.
If you do say so yourself. All right. So yeah, more on that. We just had a good discussion on that to get us started. No decision needs to be made on that, or no volunteer needs to be had on that today. So the House one, we've covered a lot of that already just in our organic discussion. They talk about equity and fairness and affordability and kind of the those kind of topics. So I think we'll check from what I'm hearing, we're going to check a lot of the boxes on that one too. So I don't want to spend any time on that. One last chance on topics. This will not be your last chance, but one last chance for today. All right. Let's move on. So I wanted to just open up the hiring of consultants. We've mentioned this a couple times, several times already today. I'll start with this. I mentioned the Principles of Sound Tax Policy document earlier. That was developed by Don Rousselong, whose name was on one of the things that Babar's had in his list from a couple of tax review commissions ago, or last tax review commission. So what I am interested in, I think this is a long shot because I know Don from when he worked at the department, but I want to ask him try to find him and ask him if he can refresh and update that document so we can reuse it again. I think it's evergreen content and it's good foundational material for any commission. And y'all have a say in that. and y'all might not like those principles of sound tax policy, but from what I've heard today, I think y'all do, because they're just the normal ones. So I think he entered into a contract with the commission years ago. For this document, it was the commission before last commission. So I might, if there's no objection, I'll start the process of reaching out to him. I don't know what that looks like. I'll talk to Baybars or whatever I need to do to try to start that. And might say
That would
no,
be a
might
great
say
resource, and I'll check with HR what we need to do. So that was one of the things, like if
Okay.
the commission wants to go forward with hiring consultants, I have to make sure you know, the paperwork and anything that needs to be done regarding that. I'll check with our fiscal staff.
Cool. So that would be that one. I mean, that's I'm imagining that'd be a small one. What they've done in the past, they had that carbon tax study last time, and then Baybar's included in his report from this company called PFM Group. I'm sure there's others, dozens of others. They had to do this big consultant report, a couple hundred pages stapled onto the back of the report. So is there any discussion or any input, any position on whether we should hire a consultant, whether we shouldn't? Are we opposed to that? Are we open to that? I just want to know what y'all think. Anybody?
I'd be open. Sorry, go ahead, Jeff.
Oh, no, yes, open.
Okay.
Yeah, I'd be open. I do think we have to kind of narrow down what topics we're going to focus on. And that will
100%.
obviously dictate who we might hire.
Yep.
Yes, I was just gonna say something along those lines. Is once we finalize like our questions and what we're gonna point towards, then I think we get the consultant to then drive that process of getting the information and their opinion.
All right. Stacy, you're unmuted, and then I'll go to some.
Oh yeah, I was just gonna say I'm on board with that.
All right, cool. Let's hear what Cynthia has to say real quick. Cynthia, please.
Mr. Chair, can you do a motion, please?
For
the consultant hiring. Can you
for the tax policy document?
No, for if you want to hire a consultant. Yeah. I think you're asking them, do you want to hire a consultant? And they're saying yes, but I prefer that you do a motion.
All right.
Okay,
I mean, I don't know if we have anything specific enough to go with a motion right now. I'm just kind of finding out what we think.
A motion to hire a consultant to be named at a later date, I think.
Well, it's a bit early without really knowing what we're hiring for.
Yeah.
I mean, I don't know if I would vote for just kind of general idea.
Okay, so it's just discussion at this point. Okay,
yes,
that's fine. Then we don't need a motion.
Thanks.
Thank you.
All right, cool. Thanks, Cynthia. Keep us straight, please. And we'll do a motion when the time comes. But what I'm hearing is openness to that. So I don't know what's going to go into that. We're going to have to discuss that. That's going to be on the agenda for next meeting. And then the big one to me is I got two things on that. Is y'all already mentioned it, which is the prompt that we give them. Prompt or prompts that we give them. It can be one contractor, it can be two contractors, it could be however many. It could be one prompt to one or two prompts to one or whatever, But that prompt has we got to develop that or those. And then another priority of mine for this is that we get it early enough that we can add value to it ourselves, because what I don't want is to get it and then we just staple it to the back, because the ledge could do that without us. Other than the prompt, they'd have to make their own prompt. But does that make sense? We're seeing some nodding heads. All right, cool. So that means we got to get on it pretty quick. So the next, if I was to assign a little homework, let's think about the prompt that we want to get to, so we can discuss that. Maybe not finalize it at the next meeting, but so we can discuss that. And that way we can get that started and get that in time that we can do our own thing with it, and just have it as a resource bolstering our own ideas. Glad we're on the same page with that. Yes, Jeff, please.
Oh, at the risk of getting this assigned to me at a later date, is it possible to even like find out if there's some kind of consultant out there that does specialize in this long-term health or long-term care tax? You know, is there an expert out there? I don't know. I'm just wondering, because we may be on like a fool's errand if, you know, we're trying to invent the wheel in 1 year on something that's extremely complex.
Yeah.
So I don't even know how you find that out either. Sorry.
Right. I think we could go off on our own and just hunt that and see. I think at the minimum, I don't know. I'm hesitant because by the next meeting, assuming the next meeting is around this time, be around March 17th. I think that's a Tuesday. We'll know a lot more from the ledge. I mean, it'll be that bill will have crossed over by then, I think.
Okay.
And it'll be like, it seems like they're going to do that, and that kind of takes it from us.
Okay.
But then I don't want to completely sit on my hands. So any ideas on that, like how to, should we do some research, try to find out if there's something out there without going too far in case the ledge does their thing?
I think it'd be helpful if we figure out what are the focus areas we really want to tackle. And to me, then it kind of dictates what we're looking for. I will mention that, you know, I talked with Carl Bonham over at UHERO, and I believe they're looking at building up their tax expertise there, as in hiring you know, an expert. So potentially you could even use UHERO. The other thought is are DBED resources available to us? I mean, a lot of this is kind of economic analysis, you know, data analysis. I mean, is DBED available?
I don't know the answer to that.
I don't think so. I mean, to the extent that they're available to the public in general, but we are the ones responsible, Tax Research and Planning Office, that are your main research supporters in this. I believe anything beyond that has been more like a commissioned specific study to look at a certain specific thing. And I know that they did the consultants did go and interview like the chief economist of the state and their head of their economic research team. And then they obviously did rely on any studies that they might have already published on some of these issues, because they do also do some research. Same thing with UHERO. I mean, we do research already together with them, but obviously that would be great. And again, that would probably be more like as a consulting gig that they can be brought in to make it there worthwhile, I guess, and to make it timely.
Yeah, UHERO staff, or whatever the term is, but UHERO was the people that did the carbon pricing study with the 2020 to 2022 TRC. Right. So that is totally, you know, in the realm for sure. All right. So going back, what I heard Mark say a minute ago is maybe, I think this is what I heard, is maybe next time we'll talk about, we'll try to narrow down our scope and figure out, sort of triage our scope. And to me that was, and correct me if I'm wrong, but that was to see if we're going to cover the long-term care financing topic at all, or was that to say to narrow down what we're considering with the long-term care financing thing?
I think it's the first,
Okay.
narrow down, which may or may not include long-term care. And Jonathan, as you said, it may not survive crossover anyway.
Understood. Thanks. Cool. Let's see.
Another question, Chair. Timing wise, I guess that's for Dr. Bebars, but even if we decide to pick up a consultant, how long does it take you guys to like procure or get the contract going?
Yes, so I'll find out about that. So that's something I just wanted to see if there's interest, and then I'll go ahead and.
Okay.
What I realize is, yeah, the procurement can take a while too. So I'll find out how much that is, so that might help with your decision making.
Okay.
Of how soon you want to go ahead and do that.
Yeah.
Exactly.
103D is always fun to navigate. So the state procurement law.
Right.
Okay, I am getting fatigued here. I think we're near the end of our agenda. So one thing I wanted to bring up, and this is not really on the agenda, so if I get dinged for this, that's okay. But is there an appetite for, and this is for the future, is there an appetite for in-person meetings? We can think about that, talk about it next time. Would likely be on Oahu. I'm on Oahu. I don't know who else is. And I don't know if the department has space. It's really busy sometimes, so it's we might not have the space at the department. But my position is there's no substitute for looking each other in the eye sometimes, and we will start to butt heads eventually. Today's been really smooth, but eventually it's going to be nice to have shaken hands and looked each other in the eye. So it come back next time, and I'll bring it back up. And if there's an appetite for in-person meetings, we can pursue that with the department.
Yeah, in the past we did. I mean, they used to be all in person
Yeah.
before the pandemic, and since the pandemic, they've been all over Zoom. But yeah, we definitely have the capacity to host.
All right.
I mean,
cool.
Yes.
All right, we'll discuss that more.
Do you sit together and then there's all the public sitting around you, or how does that work with the whole sunshine law thing?
Yes.
So I remember them. I remember one or two I attended from way back to 2015 to 2017. It was in the big conference room at the department's buildings, the Department of Labor conference room, and there's room for a sort of a rectangle tables in a big circle, which is where we would sit. Bebars would sit there, staff, and then there's just it's a huge room, and so there's just chairs everywhere. So, I mean, there were like 5 people there, so it wasn't like some huge crowd. But there are other options at the department's building, that one or any others. So that's just a matter of logistics. And then I guess nowadays we might have to. This is for Bebars and them to figure out, but we might have to might have to have a Zoom option, even if we are in person, which would be humbug, but if that's what it takes, and if that's what y'all, if y'all want to pursue that, we can discuss that another time. It's getting close to 4 here. Let's see.
I mean, our conference room has the capability of, getting all the sound and the video of the whole meeting itself on a platform. Okay. So
cool. All right. The next one on the list here is discussion of next meeting agenda. So I've got a lot of notes here. There are a lot of topics. I think we got a lot for next meeting. So I'm gonna get sort of a list sent to Bebars faster this time than last time, and circulate that with at the very least with Vice Chair, and then we'll get that out, and then hopefully early enough that y'all can have a say, and we can y'all can start to have a say in the agenda, basically, is what I'm trying to say, because this one was kind of rushed and I was out of town and all that. But I think at the very least we got enough for next meeting's agenda. So the next one, if there's no discussion on that, I'll move to the next one, which is the scheduling of the next meeting. All right, here we go. Schedule next meeting. So I think there's an appetite for keeping the 2 p.m. time slot, and possibly for trying to make it on a Tuesday every time or something like that. Let's see. So logically, a month from now would be March 17th. That is a Tuesday at 2 p.m. Hawaii time. I'm available. Anybody else? Jeff, yes. Judith, a yes.
Yeah,
That works for me.
And these are always 2-hour meetings? Because the invitation just shows up as a 1-hour meeting.
We'll fix that.
Yeah, great.
2 hours. Remembering the last commission, they were often an hour and a half to 2 hours, sometimes a little more. So yeah, we'll update that too. Anybody else for March 17th, Tuesday, 2 p.m.? Anybody can't do that?
That works for me.
Jessica.
Works for me. Yes.
Oh, excellent, excellent. That's everybody.
Sorry about that.
Bay Bars, you're pretty important too.
Yes.
Okay, cool.
It works.
All right, so let's do that. And I don't think there's Cynthia. All right, I was just gonna ask you.
I have a motion because I think somebody used their thumb. I didn't hear.
Well, that was just a survey. It's just a
Oh,
survey
that was just a survey. Okay.
to make sure we had that time. But if we have to do an agenda, a motion to set the agenda date, we'll do that right now.
Okay.
You-
Can you do a
You
motion?
suggest that? All right, cool. So March 17th, 2 p.m. Online meeting just like this. I'll entertain a motion.
I move
So moved.
to have the next
All right.
meeting on March 17th at 2:00.
Cool.
Jeff,
Second.
second. Yeah.
Excellent. All right, any discussion? I don't hear anything, so let's vote. All in favor of the next meeting being March 17th at 2 p.m. Let's do a hand
Aye.
raise. That's everybody.
Yes.
All right, anonymous, we're gonna have the next meeting then, March 17th. So, does anybody have any closing remarks? If not, I'm gonna move to the next.
Oh, I think I'm the
Item on
only
the
one.
agenda.
I'm on Maui, so really appreciate we didn't do every meeting in person.
Yeah. Understood.
And we do provide support for travel and all that. So
Oh,
Yeah, there's a budget.
yeah.
Now
Oh, yeah,
you
no,
come
just-
every month.
it's just I don't know if you guys travel a lot for work, but it takes like 2 hours in the front and 2 hours in the back, so you lose like
Yep.
half the day.
Right.
Yep. A long meeting.
Hmm.
Okay. So Cynthia, do I need a motion to adjourn or do I just adjourn? Sorry, guys. I don't know the rules here.
You can just adjourn, just note the time.
All right, cool. Thanks, Cynthia.
For now.
All right. Last chance to object. I'm going to adjourn the meeting. I don't see anything. All right, so it's 3:49 p.m. I'm going to adjourn the meeting of the Tax Review Commission. Thanks, everyone.
Thank you.
Thank you.
Next time.
Yeah.
Thank you.
Bye.
thank you.